action to either drop right back down here to the purple. Okay, market's open. I went ahead and added a single contract for 611 for the call side. It's at $6. We first bought it at 90. The average is now at 45. All right, family, remember, purple box first. Once we hit the purple box, we're going to look for 0-day calls for the upside. If you go straight through the purple, just watch out. You might continue to collapse straight down to the bottom of 594. So again, under 599.07 puts. If you're holding on top of 599.62, calls. And once you hit this bottom area down here, as long as you're paying attention to everything written on my screen, you're going to see exactly what to do, which is to play the calls right down here, only 3 to 5 days out. Once you go a little bit lower, then you want to start playing calls that are 10 days, 5 days, 30 days, right? For now, you just want to allow this market to either one, shut down on top of the purple, which is right where the 200 moving average is. I know I'm on the 15 minute, so let's actually go back to the 5 minute real quick. And on the 5 minute, same stuff. Once you get above this yellow as well, which is 603, let's just say we go straight up to the top right now. You want to play calls above this. I want to see this market drop below the 200, so I want to see it drop specifically to around 597, 596. So that's what I'm looking for. 597, 596. All right. Okay, so we got this going. That's all set up. Let's actually zoom in a tiny bit here. There was another chart that I made that looked really, really, really good. Let me see. Actually, it's not that one. I mean, we do need to look at this one because of the wedge, right? If you resume this wedge, which is right around 601, you're going to run right back up to the top and potentially break out up here. So I'm just looking at this wedge right now. And then as we start to cycle between all of our charts, the one thing you're going to start to recognize is if you stay above 599.20, 21.20, so 599, let's just say 20 flat, calls to 603, below 599, puts to 594, family. Again, family, puts to 594, below 599, and once you get above 599.20, calls to 603. We'll start to cycle between more charts here. This chart right here says above 601 calls, so another chart that's referring to 601. You have this chart as well, which the reset point is around 600, 601. Below this point, you're going to fall straight down to 593, just like you did 2 times, just like we predicted it, right? If you get above this area, you're going to run right back up to this reset point, just like we also predicted that as well. So as of right now, as I speak, we're just waiting. We're giving this a second. We're allowing this to either hit the purple or the golden one. After that, we're going to have further directions as to what we could do for our accounts, right? As well as the one thing I want you to pay attention to is when I go to this chart here, where is it? It's the reversal chart. All right, family. So when you're looking at this reversal chart now, the one thing I want you to recognize is that I went ahead and set you up for success once again. If you look at the reversal points at the top, it's now guiding you in terms of a capital standard, in terms of a capital amount, right? Telling you exactly what I usually do at certain reversal points, which is adding certain amounts of, just money to it, right? The first reversal, which is where we're at, you would only put $10 to $20 max. The second reversal, which is usually, a little bit below us or a little bit above us, you're going to put around $20 to $40. The third one, 40 to 80. Fourth one, 80 to 160, and you get the point, right? For the fifth one, you're putting 160 to 320. Of course, you're going to get the days out. The one thing I did not add here, which I'm going to add either later today or tomorrow when I have some time, is the strike prices. Strike prices and days out. That's the only thing that needs to be added here. Other than that, you still have this primary note, this primary little just set of tips here. And as long as you follow this, you should be good. Remember, number 3, number 4, number 5, those are your most important ones. Number 4 and number 5 is where I like to put my money into this market. Anywhere in between is more of a risk, but it's still very good profit. So again, just like yesterday, same old stuff. You're still stuck around this 601. Is that the 601.20 line? Yeah, 601.20. Still stuck around that same area. So because of that, we're going to play this very slow, everybody. We're not going to rush this. We went ahead and averaged down on our calls for 611. So since that's all set and that's all done, all we got to do now is just take it slow. And there you go, family. So as you're looking at my screen right now, I just want you to see that this is every single buying point, every single selling point with an exact just walkthrough. Honestly, that's it. 5%, 10%. How many days out? How many strikes out? Calls or puts? Point blank. That's it. Easy as that. Do it a couple times with a paper account. See how it rewards you. Make sure you're patient. Make sure you're listening to the rules, and make sure you're listening to the suggestion as well as where the arrows are pointing towards. The prices are not on this. We start to fix that later on. However, just account for where you're at. Currently, you're at this level right here, which means that automatically, point blank, before you can even think, you're instantly buying into calls 3 to 5 days out, or 1 to 3 days out, 3 to 5 strikes out. However, since we've been hanging at this same level, I suggest paper trading for now. But this is exactly what one would do, is what I'm trying to say. You would do exactly just this and only this. 10% there, 5% there, 20% there, half port there, and that's it. As long as you consistently invest like this, there should be no reason why you're putting too much capital into the market. We just broke it down horizontally, vertically, diagonally, and we broke down the capital that you're going to be using throughout that whole entire just chaotic little problem, right? Chaotic situation. So this is perfect. This is perfection. Try it. See how it goes. Paper trade it. Take a picture. I need you all to start building charts like this within the next 2 to 3 days. So, again, everybody, make sure you take your time, take a picture. Let's see here. So again, we're running up to the first reversal point. This is what it looks like on the supply and demand zone chart. Again, this is your main chart. And remember, this is your main idea right now. You still haven't hit the purple one, so it's not like you bought into anything yet. We also have the NVIDIA options. Let's check those real quick. That AMD option shouldn't have dropped that low because of that. Let me see where is it at right now? 107? No, yeah, it shouldn't have dropped that low because of that. That's insanely low. So we're going to have to average down on these plays here. I didn't even recognize that. That's $51 from $200. All right. So we're going to give this some time. We're not going to do it today. Do it tomorrow. Allow at least 1 to 2 days of the market to just average itself in a little bit. Once the the prices for the contracts are a little bit lower. We'll see if we're going to average down here. For now, we're just leaving that alone. We have the SPY call for 611. We're going to allow this to run up to 602. The second you hit 602, the first thing you could do is, of course, test the puts. However, family, please be careful here. Remember, the wedge that we're currently stuck in is basically compressing itself. So everything is becoming smaller and smaller and smaller, which means that you're either going to get a large move here by tomorrow or on Friday or potentially even Monday of next week. Goddamn. So again, take this very slow. Especially with all the situations that have been arising with news and data and all these just random chaotic pieces. As long as you follow these charts like this, such as this chart right here, there is no possible logical way for one to just buy too much, you know? I even started creating a safety level mechanism so that within certain levels of trading, one has their own route. For instance, are you at a level 10 or a level 5 today, right? Have you lost big this week? Or was it a 0 day? Was it a weekly? Break it down completely. Have you had a bad entry or exit? Or was that entire trade garbage? Call it for what it is. Are you watching too much news? Or reading too much news? Are you watching too much videos? Did you create a plan yesterday for today and spend at least 30 minutes to an hour creating it? Are you confident? Because then, of course, you can drop the level down, the safety level. You can start playing with something a little bit more aggressive, a little bit more dangerous. But it's only if you're confident. And then you're going to have the safe or the least safest level, which is number 1. And I haven't made that yet. But for now, everybody here should just be following number 10. There's no reason why anybody here should be following number 5. I'm not trying to kill the confidence or say you don't have confidence. I believe everybody here is very intelligent. I believe you have your own confidence. However, if there's no progress within the first week, then you need to start switching things up. Remember, you should be making profit within a week. My first month of options trading, and I know not everybody's the same, of course. I get that. First month of options trading, and of course the market was running up. This is October of 2021, so that was the lucky part, right? But I went from 3K to, 60K within 2 weeks, 100K within the third week. Of course, that led me to then lose the money because I wasn't knowledgeable as to how to keep it or maintain it. So, of course, little by little, in the beginning of 2022, it just slowly dissipated, point blank. The only thing I had left was Upstart, but at that point, it was down around 15,000, 14,000, and that was the last bit of capital I had around 2022 in the beginning. And then from the beginning of 2022 all the way to 2023, it was a slow buildup, little by little. So remember, if you're trying to play with a lot of capital here, you're going to get burnt, especially right now. This was the exact scenario that I put a lot of capital into this market 3 years ago, and it burnt me. So what I would suggest here, everybody, is, again, play with a level 10. As you become more confident, you'll drop to level 5. You won't have to have me tell you that, right? You'll understand when you're at a level 5 or when you're at a level 1. And that's all I want. Is for everybody to be very cognizant of where they're at. Be very real with yourself. You can't be number 1 just doing this a couple months, Unless you have that dedication and motivation, then maybe, who knows, right? But for the most part, again, everybody, play this very safe. Read whatever is on my screen right here. This is basically another key. If the market gains momentum here while you had a breakout to the downside and you get above this wedge, which is this purple line here, you're going to head to the top and possibly break out at the top now. How do I know that? For instance, look at this yellow wedge here, right? You broke out the bottom of this triangle. What happened right after that? You broke out to the top, right? That's exactly what we had said around this point when you were at the low down here. That's why we bought the calls down here. And that's also why we bought the puts up here. Because at that point, you were now approaching the previous highs. And if you weren't going to gain momentum above it and hold above it, you basically were just going to drop out the sky. So what we did was right here, we ended up buying the puts. You dropped out the sky the next day. We were up 5,000% on one account. On another account, we were up only 500%. And then on another account, we were only up 300%. Actually, no, 200%. That was the cheap SPY 585 call. You then ran right back up. That call dropped to $100 again. It then dropped right back down to 600. We sold it. From down here to currently where we're at right now, because of you basically compressing in terms of the range, we want to wait until this is either going to approach the top, or we want to wait until this is actually approaching the bottoms here. This right here is just going to make everybody lose money, point blank. Because of how erratical it can move here, there is no base that we can maintain. So until we start maintaining something, and of course you can call this a base down here, right? Such as down here. I agree. However, if that is not maintained, and you see this start to, shoot down right back below, you're going to break out this wedge and potentially head lower than this yellow one here, this orange one. Because think about it for a second. If you broke out to the downside this much, then you broke out to the upside this much, if you break back down here, you might just drop out the sky here and fall somewhere down here again. And this is just because, again, markets compress and markets accelerate. They gain speed and they lose speed. That's it. That's all markets do all day, every day. That's it. They slow down and speed up. Slow down and speed up. Of course, you have some days where something is paused, but aside from those days, everything else is just slowing down or speeding up. So if you're always thinking like that, you can know, all right, if this has sped up to the downside a couple times this week, those calls are just getting destroyed. So if you understand that, all you have to do is play these calls at certain points, because what have they been doing so far? And it's pretty funny, right? They make you approach the highs, and then as soon as you approach the highs where you want to get the calls for the continuation of the trend, they just go a little bit higher and they snap you right back down below. And then now when you're in a situation where it's a little bit worrisome, this is the perfect environment for them to make a big move. So that's the one thing I want you all to pay attention to today. Anywhere above 601, 601.30 specifically, you want to look for more upside. 601.30. The one thing you need to watch out for is the fact that this is just going to run up a little bit higher and just drop again. Just like it's been doing pretty much all week here, or last 2 days. Aside from that, family, let's go back to our other charts here. Let's look at what's going on. These are all your wedges. Every single wedge you have here, they're all right here. And this one says we need to get above that line at 650. If you get above that 650 line, you can see us start to run to this red area, which is up here at the top. Got that, family? Again, take this very slow. My main concern, promise that you will sing about me. And then for QQQ, this is what QQQ looks like. Anywhere above 518, you could run right back to 530. 624 is in the middle, just like you hit 624 yesterday, which is kind of nice now that I'm looking at this, because you can literally see the staircasing. So it hits this, then it hits this, which means that the next low possibly is 512 on QQQ. If you get below 518, you're dropping to 512. And what this line is basically showing you that if you hold 518, you're going to potentially start running up towards the 530s again, right? And then, of course, you have the little areas right in the middle, which are these areas right here. That one right there and that one right there. And what you want to do here is you just want to see if we could fall right back below this or hold this. And that's all. Amazon still holding. This thing has been following these lines so nicely. It is ridiculous. This looks amazing. Again, if you get below this area, you're going to hang right back down here at this lower area. It's kind of funny how this is also holding the same thing the SPY is holding. It's just wedging right here, which is perfect. If it can get to this point right there, like right there in a couple days or in a day, and then it could just snap below everything, you can go right down here again, which would then go lower than this low. You would then probably bounce, right? So you would go, let's just say this low, you would probably bounce somewhere right here and then start bouncing outside. That would be the main idea. And again, this is if the market's crashing. If the market's not crashing, of course, obviously you're just going to hold. Give yourself a double point of confirmation and end up running up higher, right? Come on, SPY. Give me exactly what I want. I want you to flash crash out the sky here. Go straight down to 585. We're going to pick up some nice 90-day, 60-day calls. We're then going to play some 1 to 5 day puts. Just so leverage ourselves, right? Just to have some nice insurance. And if we don't do that, hey, it doesn't even matter. Why? Because the second that thing hits that purple zone right there, we're getting into a $20 call for the upside. The second it gets below that purple, we're getting into a $150 put for the downside. 8 days out. About me. Promise that you will sing about me. Remember, everything is on the screen, everybody. So the first call out right there on the screen says 0 days. The second call out right there says puts 8 days out. So make sure you just take your time to take a picture and just read around the screens. If you need to take a picture on Windows, by the way, it's the Windows key and the print button. Or you could just press Control-Shift-S. Control-Shift-S will allow you to take a screenshot so you could then share it with us on the Discord. Remember, you're falling down now. Let's zoom in. Oh, right. Let's see here. So, same old stuff, family. You know what we're looking for. Sing about me. Remember, you're holding above the 200 moving average right now, which is perfect. That is bullish, right? That's exactly what we want to see if this market is going to continue to head up higher here. However, I kind of want to see how low this market can go here. Let's see if we could drop to this orange one right down here. Remember, you want things to start being a little weird. Meaning, as long as we could start dropping below certain colors, trending a little bit differently, and snapping in different ways than we've snapped last week, such as not snapping on Friday again, as long as we don't do that this Friday, things will start to change very slowly. If you have the same trend this Friday, which is, again, you snapping down, things might become a little bit more chaotic for us here in terms of the next week. Remember, you did this trend 2 times, and so far, you're holding at the top. So it's not at the purple zone yet. Yeah, this was phenomenal. So again, if you hold here, you're going to start running up a little bit higher, straight up to 60160s, and then potentially higher to 603s, 605s. This is getting exciting. So yeah, you might actually fall straight down to this orange one down here. That's going to be the equal reaction currently. And if we go to our other DARP chart, I don't know why this is making me so excited. This is very weird. What's happening? What's going on? Something's gonna happen today. Remember, we're taking the easy route. Very, very slow, family. We're gonna put on this next chart here. There's one chart specifically that we need to look at, which is your reversal chart. So let's go ahead and fix this now. So starting small. All right. Do your worst, Spy. Let's see it. I want to see if we could break our record today. If it's going to be a slow day like we think it is, this is definitely the day. If not tomorrow. No main concern. Promise that you will. Oh yeah, Kay, make sure you set up your one-on-one. And Fish, make sure you set up your one-on-one with me. Since both of you just recently joined, usually I have every single body that just recently joined not trade a single option until they actually go through at least supply and demand zones, so you can have structure on your chart, right? So point blank, I just want you to have something on your chart just in case if I wake up late or something happens that day. These next couple of days here, I'm not going to be live, just so everybody can understand. I'm just going to be on the Discord for the next week. So if you need help and you need guidance, again, Discord. And that's going to be from the 7th all the way to the 14th. Then I'll come back. So this is very important, you know, just to make sure everybody has this so everybody's straight. I'll try to see if I could leave my computer on for a week straight. I don't know if I can. It might blow up, so we'll see. Again, we're looking at the call side now. This is your first entry, which is the quick entry, right? This is the same entry we got into yesterday. So, again, everybody, you're looking at 604 calls or closer. If you're trying to, what's it called, trade the 0 days, right? 604s or closer. Anywhere below 599 flat, we're going to continue to play the downside. I'm going to send you a link to the website so you can start setting up your appointment. I might have to fix something, so for now, just in case if I don't fix it by tonight, if you could speak today, just let me know. Text me. Whenever you could speak, I could speak to you. I'll stay up at 1 o'clock. I'll stay up at 2 a.m. It's just you gotta let me know. I'm here 24/7, family. Come on now. But no, yeah. So you could text me around that time. Again, if you got the calls right there, you're instantly up. You're right against the ceiling right now. Those calls instantly just doubled, 100%ed potentially. This is going to be fun. Oh my god, this is going to be fun. That was excellent right there. Those calls went instantly 100% within a matter of seconds. So that's how we're going to play today, Spy? Huh? I'm ready. I'm ready. You're ready. We're ready. I don't know how they just switched that. I'm listening to the song. This thing sounds crazy. Looks like you got sold right back off. Remember, I want to see you drop down a little bit lower than this purple one. The reason specifically why I want to see this drop lower than the purple one is I want to see if this is going to approach yesterday's lows. Currently, you're at around the midpoint. Once you get to the next midpoint, which is exactly at the high of today, or the high of the day, right? We can then see this potentially start to run up to this golden line right here at the top. You're still looking bullish because you're above the 200, right? You're still chilling right next to it. You're not really dropping out the sky no more. The flow looks like it's pointing up now. So again, you could have another bullish day today, and that's the thing I want you all to recognize. Watch out if you approach the 602, 603 highs. Remember, don't rush a single thing, family. Do not rush a single thing. No more red days. And if there's going to be a red day, you have to have it, be very minimal. $20 max. I don't want to see nobody, down more than $50, down more than $20, down more than $100. That's it. No more. We don't need to do that no more. So we're going to build the accounts, build the safety net, and then with that safety net, on certain days at certain times, we'll play more aggressively. You're not playing aggressively every single day, of course, right? You're just going to burn yourself out. And as long as you recognize that, as long as you can tell yourself that, do not trade every single day. Do not trade every single day. Do not trade every single day. Stop trading every single day. This is the reason why you're not doing amazing. As long as you can tell yourself that, I promise you there would be a boost in terms of just your experience here. I know it's going to be bugging you and itching you. You could paper trade if you would like during those moments, of course, right? Just to fine tune yourself, get your skills up there. But you shouldn't be rushing a single thing here. Truly. There we go. Come on, Spy. Break your legs. I see a nice price down here. Let's go look at our reversal chart now. What point are you at? You're at number 2. So since we're right here at number 2, I just bought into a 603 call right here. Again, 603 call. The next area you have is 598.51, which is about 20 cents from here. So again, 20 cents lower from where we're currently at. That's your number 3 entry. Only $20 we use for this first play. If you drop below 598.51, you may use that as a stop loss in case you just put too much capital in, or again, you're just a little unconfident. Inconfident? Unconfident? Not confident? You get what I'm saying. Options are at $23 from $26 right now. These were 0 days, so remember that. Sending it into the disciple tier. Again, the disciple tier family. That's where we always post our cheap trades. Anything more than $50 or $100 is now going to be posted in the Prodigy tier, just so everybody knows. I want to see this market run up to 603 now. It's either going to run up to 603 or 642 before it changes directions again. If you just straight up drop to a new low right now, of course, that's just a continuation of this direction, right? Now you're above the purple, so let's see if you just stay above it. Sold right back below it. Again, just give this a moment, right? Just a moment, family. Let's look at some of these other ideas that we have on the board here. Like we told everybody, if you stay below 599.20, there's a good potential chance you're just going to fall from the sky here and fall straight down to 594. Currently, you're stuck right around that same area. That's currently the area we're playing the calls by right now. We want to see if this line right here is going to hold or just blast this up into a new high. If it doesn't hold, you're going to go below 585 or 588.50, 588.80, 588? No, 598. I apologize. 598.50. This SPY's moving around so much. It's crazy how we're moving whole numbers within a couple days. Again, we get below this orange zone here. We're going to continue to look for downside straight down to this yellow box right down here, which is at 595, 594, family. Da, 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 da. $606. Remember, everybody, please document everything you see going on here. Every single 5 to 30 minutes, I want you documenting exactly what has happened, exactly what's a switch up in your thought, exactly what level you think we're going to run to, what level you think we're going to fall to. Every 30 minutes, update this. You don't got to create a whole paragraph, right? Create a whole essay. One bullet every 30 minutes. Simple, sweet, effective. Just like that. Every 30 minutes. Do you have a change up in thoughts? Are you scared now? Are you worried now? Do you now think the SPY is going to run up? Do you now think the SPY is going to go down lower? Regardless of what I'm saying, I need you yourself to start creating these concepts and ideas just so you can start building your confidence, right? If you're not building upon no solid baseline, you're not going to have confidence, and eventually the whole entire structure of what you're doing here is just going to cave in on itself, right? Make sure you're doing supply and demand zones, which is currently on my screen. We got the YouTube video up for almost a year now. And it's the same stuff, right? Color to color, level to level. When you're stuck at a certain range and you've been, pretty much just stuck here the whole entire time, the one thing you want to recognize is oftentimes resistance becomes support. Correct, everybody? and sometimes support becomes resistance, right? So that's how you're looking at this purple line right here, this purple zone. It's in the midst of becoming support. It was resistance for a couple of days since we were below it, but now since we're above it, it's in the midst of creating support. Again, from resistance to support. That doesn't mean we're going to change the color to yellow. That doesn't mean we're going to change the color from a purple selling area to something gold for calls, right? It simply means that at this current moment, at this current time, you're currently in the process of switching trends, which means if you hold above that area, you can further see us getting bought up to the new high. Options are already up 20%, family. If you hit the orange zone on top of the purple and then get sold off back into the purple, there's a very good opportunity for you to continue to fall down even lower. So again, watch this here. If it gets above the purple and then you drop below the purple again, you might have an issue here. So it's currently in the purple, hasn't stepped out of it yet. So currently you're still waiting basically, right? First this needs to happen, then that needs to happen, then this needs to happen, type of thing. Options are now down again. Alrighty. We already looked at this chart. We went over this chart. This chart, we're going to have to fix it up a little bit. So we're going to fix that probably in like an hour, 30 minutes. Still really good buying points, as you can see. Above 601.57, this has calls to go higher. And then obviously below that, you want to wait till we fall to the bottom. This is just the whole entire midpoint here. That's why it's just confusing and a little annoying. Once we break above this, it will be a lot more simpler, a lot more funner. Funner? Is that a word? And if you get sold off from where we're currently at, below this green line here, you're going to fall straight down to 594. Got that, family? 594. Let's go back to the main charts now. Futures getting sold off here, which is kind of funny because now SPY's getting bought up. This is delayed by 15 minutes, so it's kind of funny now that I'm thinking about it. If it's delayed by 15 minutes, hold up, wait a second, son, it's not right here. This might be if this is an early prediction for SPY dropping, this is gonna be funny. The futures is still going down. It has to be because it's 15 minutes delayed data. Has to be. There's no way. Again, options are up 30% here, family. Let's see if it's going to snap above the 200 moving average. You could put your stop loss around this point. Stop losses, stop losses, stop losses. There we go. Remember, you just hit the orange zone that's right above the colored zone here, the yellow one. You know what that means, right, family? If it gets right back into the purple, there's a good chance you can go lower now. How do I know that? You see it happen so many times in a row. 585s that happen, 593s that happen, 606s that happen, 570s that happened, and that's pretty much ever since I've been paying attention to it. I didn't go back before that, but since then, yeah. So let's just see. You're in the purple now. I'm still holding my calls right now. Why am I holding my calls right now, you may ask? Because this market is still clearly bullish. You haven't made a lower low past yesterday's low. You ended up being around the midpoint, specifically around the low point. Since we're still going to hang around the midpoint, which is currently where we're at right now, we bought the call at the low point, which is perfect. Might go lower, so we have number 4 and number 5 in terms of a reversal point, so that we could 1 average into the same play, or 2 buy a whole nother play. And the one thing I want you all to consider is that before the market had opened up, I had made sure to place this on my screen, which is these 2 new arrows. If I scroll to the right here, this one arrow, point blank, it says that. Puts, point blank, they say that. Now, this is the first time we were at this low after, falling from the floor and then running back up. This is the first thing we thought of. Since you've been at this level already, the way that this would actually switch is currently how I spoke to you about it. The way that it would switch is by not actually holding the purple here. It's by actually holding the purple, the zone below the purple. So as long as we focus on that for our calls, theoretically, that would be one of the best buying points, which is exactly what we did. We just used a little bit lower in terms of the amount of capital, right? And yeah, as long as you stopped out right there, you completely stopped out 30%. If you're trying to rebuy back into that same play, how do you go about rebuying into any play? First thing you need to do here is acknowledge the fact that you're still in the purple. Think of this as a progression system, meaning it goes from one level to the next level to then the third level. It's either ramping up or it's slowing down. It's either hitting its $3 multiple, $1.50 multiple, 50-cent multiple, or it's not. It's either at the third reversal point, fourth reversal point, first reversal point, or fifth reversal point, or it's in the middle. And as long as you start breaking this stuff down little by little by little by little, 200 moving averages above us, the EMAs are above us, we cross below them, plus this is the 5-minute, plus you hit a lower level, plus you're still stuck at the purple. So no, yeah, this is going to be a really awesome level to hop into the puts below this. You start factoring more ideas, more concepts, and with this in mind, you start to encounter one of the funniest perspectives or funnest, how should I say this? It's just an attribute of the market, right? An attribute that this market has I shouldn't say had, I should say has, because it still consistently has it, which is at certain points, as long as you're obviously just using very low amounts of capital, such as when you're stuck at certain levels, kind of like this level here, you slow things down, you understand it a little bit better, and you can actually see where this is going to break out, because whatever you did do today is an idea as to what you will do tomorrow. You get that? So far, we opened up, we were down, we were red, you went below the 200, now you're getting bought up to it. So point blank, the only thing I want to see now is you get above the 200. And since you now did the equal reaction to the bottom of it, remember when you were at the top up here, we told everybody we want this to snap below and hit this orange zone down here specifically. Not this one, not this one, not this one, not this one. Specifically this one, and that was going to be our first buy. And so far, you got a really nice snap. It's following the idea correctly. And that was the reason why we got into it. Does that make sense, family? How we thinking? How you like that? Is there anything I did not explain about this play here? Do you not understand anything about what's going on? First thought that came to mind. Let me hear it. Let's look at some of these other names real quick. ES is still... So now you're getting bought up here. So let's see if SPY is going to start to crash, right? $32, $33. So again, family, we're just allowing this to consolidate here. Top to bottom. Let's see, another $2 straight down. All right, family. We're up 30% once again. Just like that. Snap of our fingers. Put your stop losses once again. Of course, now you have the potential of going up higher. And the reason why as to you can go up higher is just due simply to the part that you were here earlier. You got sold off from this area. You dropped to a certain specific low. you're now right back up here at this level. So what does that mean now, right? That's the first thing you should think. Why are we here? And what's next? First thing is, if we hold above the 200, which is currently what we're doing right now, what does holding mean? Again, let's go through that again. What does holding mean? It simply means it's above the level or around it. So it could be a little bit below the level, believe it or not. That's the one thing that a lot of individuals get misconstrued. Being below and being above is pretty much the same thing. It's a range. Remember, this market's always a range. So if it's above it and it's holding just like how it is now and it's ramping up and you're still in the calls, you're feeling good right now. You're feeling nice. You're moving up your stop loss just in case it switches and snaps because it's still very early in the day. And you're still looking for higher upside. If it snaps below this green line here and you start falling down, the first thing you need to understand is that you can fall to number 4 or number 5. So that's the next area or location you want to buy. Got that, family? Number 4 or number 5. Those are the only two other locations you want to buy calls at if this continues to head lower. If you're trying to hop into the puts, where do you hop into the puts? Personally, for me, my first level is going to be around 602.60. I might even hop into the puts while holding the calls at the same time. Who knows? Probably not, though. I tend to sell my option out first and then hop into the opposite way, just so I don't make it messy and chaotic, right? Options are up 40%, family. Again, family, make sure you're always putting your stop loss up. 30%. That's a beautiful gain, honestly. 2 of them back to back right there. That's amazing. Let's see if we can get another one, right? It's the first thing I'm thinking. And if it continues to go up higher, of course, you already acknowledge and understand that this can go up higher because it's just stuck in a certain range, which is unfortunately the only thing we have to worry about. You could just snap down just because, right? You did exactly just that in the morning. You already snapped down. Now you're snapping up. Now there's a certain trend already intact. You went one direction up. You then changed directions very quickly. The second leg was down. The second leg then ended up at around 598.50. You held around that level, correct, everybody? So because that level was lower than the market open, it therefore means that that is a new leg that is now ending. Because you held at that point down there and you're now running up, the second this makes a new high, that now initiates the concept that this is the third leg, which is what I want you to understand. Usually with a market, you only have about 4 to 6 legs a day in terms of what SPY normally trends. So 1, 2, and then 3, 4. So if you already had one direction, 2 directions, and this is your third one, or you're en route to your third one, I would think that this is probably going to most likely go up higher than 602 or even the market open. You're probably going to end up at 603 or 604 here. And again, family, you don't just radically, irrationally hold something for that high. The way you would play a move like that is you would slowly buy into certain plays at certain times throughout the day. In terms of averaging down, you would also slowly do that as well. The only time I personally ever average down is when I'm down 50 to 75%. The reason why is because normally I should not be down. The only reason why I would be down is if the trend is continuing to go down into a lower level before it wants to kick in with the concept that I'm playing with, which is upside maybe in the moment, right? And of course, that's not to hide the concept and the idea that we can be wrong. That's not what I'm trying to say. Of course, we can be wrong, and you got to be very fine with being wrong. Kind of like yesterday, right? Yesterday, we just had one single put, and we held that one put all day. The only other time we thought about averaging into another set of puts was right around here, which was right around the ending of the day. But at that point, there was just no purpose. We said, all right, let's just wait for tomorrow. We're going to get some better plays. As long as this breaks out on top of 601 or breaks down below 594, we'll get a nice play down there. But no, yeah, you were just stuck in the range. So unfortunately, because we're stuck in our no-no range, right? We're just waiting right now. Options are up 44%. Move your stop losses up, family. Do I sound monotone or I don't know what it is. I'm like dying back here. I'm a little sick. And that was a nice little leg to the upside here. If it ends now, remember, you're still on the second leg. Once this leg creates a new high, it therefore now initiates the fact that this is the next leg, which could then mean you're either going to snap down on top of the 200 or you're going to just potentially hold on top of this green line here. If you snap down below this green line, which is right here at 600.02, that's about 40 cents away from where we're currently at, right below the 200. You just want to make sure you stop out. Make sure you don't have any calls past that point, just in case it goes lower. So everybody should have got stopped out right here. If it holds this green line, we'll hop into another play. Remember, we want to see if this is going to have a higher high or if this is going to end right here. Same concept as yesterday and the day before. You're still looking at 603 calls. They're still 28 now, 27 now. Now they're 26. You're falling right through the green level. So again, be very careful here. The one thing you want to recognize is that if you're falling below this green line, very good chance that you're going to go even lower. So as you're below 599.99, just watch out for further downside. As long as you can snap above 600.02, you can continue to see this go up higher. Shake and bake, family, you got this. Don't be worried. Even if things are not going your way, figure out why they're not going your way right there, family. Write it down. Please document everything again. You then are going to prepare for your next entry. What I like to do most of the time is usually prepare for my next entry within the next 30 minutes. So if I get into one play, I'm usually going to get into another play within the next 30 minutes. So if you also get stopped out, and let's just say you take a loss, take a 30-minute breather, go step away. I'm telling you, take 30 minutes. Get right back on the board. The one thing you're going to realize that's going to be kind of scary is that after a certain amount of time, you're going to recognize that 30-minute rule be the one thing that's weirdly on time. And what I mean by that is if you hit a certain new area, SPY tends to consolidate and hold around that area. Again, new area, remember that. So for instance, if you go higher than yesterday's high and you're approaching a new area, as long as it wasn't yesterday, you can consider that new. Just due to the volatility of these options and how quickly they move, within one day, things are already applied in terms of prices, in terms of contracts, in terms of buys, in terms of IV. So because of all those factors, yeah, you could just look at tomorrow or yesterday. And if you get above that level, yes, you could say you're bullish on the day. Until then, right now, we're still stuck in the middle. Today is neither bullish or a bearish. Which kind of explains why it's still stuck around the 200 moving average, right? 200 tends to be around the midpoint. Which means we need a blast away from the 200. And then we're probably going to play puts back down to the 200. Or let's just say if we fall down below the 200 right now, we're going to play the calls running up to the 200. Got that, family? By the way, if you bought into those 603 plays, you're already up again. Whoever was paying attention to that. Excellent, family. That's your third try already. That's 3 times in a row. 20% at least. And this is what you're looking like on the consolidation zones. Again, this is the chart that we've built. just to show you where things can consolidate. As you can see, consolidation zone. Isn't it kind of funny that I built this consolidation zone before this price action even happened, and it's kind of consolidating at the same area we thought it would consolidate before it started consolidating? Wild, right? Sorry, did I just talk too much right there? I felt like I did. But you get the idea. Wild. This is making me want to just breakdance right now, let me tell ya. This is beautiful. Put your stop losses. You also hit that white line as well. How about on this one? Did you hit it too? So you didn't hit this one. You hit this white line right here. What does that mean? This simply means that if you don't get above this area here, you're going to fall straight down to here. If not, straight down to here. Got that, family? And of course, if I had to give you an accurate depiction as to what could truly happen, I would say you're probably going to fall down here. That's where I want you to fall. I've been waiting weeks. This is going to be a nice little play down here, let me tell ya. We did get stuck in the 580s for a while here, which was annoying. So that's the only bad part, you could say, right? But that's all good. Since you fell down to the low here, right? Let me give you an idea as to what can happen next. You fell down to this low, correct, everybody? So far, you went up that high. You get above this white line, that's how high you're going to go. 604.06, point blank. I'm going to leave the box here. I'm going to extend it so we can see if this is actually what's going to happen here. If you make a lower low, we're going to have to increase the size of the box. If it stays as is and it consolidates around this area, we'll see. We'll give it some time. Looking at this chart over here, basically the same chart. This one's just more fine-tuned. And as time progresses, I'll be sure to make this even better and better. I have no idea why I had an outline for all these boxes here. It just made it look so messy. You know what's the wildest thing in the world, family? If you look closely at this, right, and you zoom in, all these calls and puts are accurate with what can happen. For instance, look at this. You're below the line, so we said calls. You jump above the line, put your stop loss, just in case this wants to dramatically shift below, and look what happened. But you know what's the funniest thing? Guess what? I have the puts right above the line that says it right here. And right here. And right here. And right here. So yes, you can actually predict market movement weeks and days ahead of time with your eyes closed. All I gotta do is know where the resistance is, know where the support is, and I know it's gonna mess with that level. So I'm probably just gonna buy my calls right below it. And of course, it's gonna go massively against you on some days and at certain times, but that's fine. That's okay. The risk for reward value here is something you're not even going to think about, truly. Think about it. In most cases, you're going to have an insurance play. You're not just going to have that 0 day or 1 to 4 day play. In most cases, you're going to have a play that's 30 days out or a month out. How do I know that? Because if I go ahead and switch to my main chart here, and I go to the right side, if I zoom out right here, what does this note right here say? Sorry. What does that say right there? If you look at that, it says 30-day calls right here. And what did you do? You're currently $10 higher. What does it say up here? 30-day puts. How much times did you fall from the top? Once, twice. And we were up 1,000%, 5,000% on the first time. And because we still had the same play from over here, because I didn't feel like buying another one, truthfully, I was just waiting for this to go up to a certain amount. So it's kind of lazy, right? But we still held it from here. It went down to negative, so I was down almost 50% from being up 200% right here. And then it went right back up to being up 213, 230%. I sold out of that play. But remember, that was my 30-day play. So now I have no insurance right now, family. I didn't buy the call at the bottom, even though I had suggested it on the screen. The reason why is because I wanted to play this even safer than I had it wrote. Which, how do you play it safe? Well, for one, you don't play levels that you just recently hit. Because if the market's staircasing, it's not going to hit a previous level. If you're going this slow, it's telling you might actually go this slow down here. If that makes sense. Does that make sense, everybody? Because remember, we had this 30-day call thing since you fell down right here. All we did was just move it to the right. As we moved all the arrows to the right. So, that's the one thing I want you to recognize. And remember, if you pop into this box again, you're going to break out towards the top. If not, get awfully close towards the top. So, if you're playing options 5 days out, 10 days out, 20 days out, how do you mentally know what strike price to buy? Sometimes I see that issue happen all the time where one may not know what strike price is. Again, it applies to whatever chart you're looking at. This chart right here tells me the top of this wedge is $610. So point blank, I want to get something for 608, 605, just so I'm in the money. When you go from out the money to in the money, that's the most rapid way to increase or to gain profit. The reason as to why that's the case is because delta, specifically gamma, which increases delta. Remember, gamma increases delta. The gamma, there's something called a gamma ramp. The gamma ramp starts at about 5 to 6 strikes out for SPY. For Tesla, it's usually around 10 to 14. For Nvidia, it's around 10 as well, 10 to 5. And what you'll often find is that oftentimes you make a move that ranges between a $5, $10 play. Like for instance, QQQ. QQQ usually moves around $5 per day. SPY moves around a certain amount per day that I'm not going to say. Why? Because I feel like that's unfair. So you have to find that out yourself. With everything else, the one thing you'll recognize is that if you can track down exactly how much it moves per day, once you get that move, that's it. You're done. Your day is done. That's what I want you to consider. Sometimes one may not know when to finish or when to end their day. That right there is how you do it for SPY. Once you make your daily move, that's it. You're done. If you're planning on trading a weekly move, then of course you're looking at this with a different lens. You're not gonna, mix up the plays or get them confused. There's gonna be separate ideas, separate concepts, which also means that if you have a play for 5 days out for the call side, and then you buy a 1-day play or a 0-day play, you're very at risk for a large drop out the sky. So the first thing you want to consider is that if you have a call that's 30 days out, you get into a put. No, sorry. You get into another call 5 days out, let's say, because you recognize this being another good move that you could potentially snap up to the upside. What do you do now? Scalp 1-day puts. That's it. If you have a 30-day call and then you see a potential entry for the next 3 days, let's say, and you want to get into a 5-day play because you're trying to just meet it right on the dot, you want to go in the money about a day or two before it expires. If that's what you're trying to do here, then again, you have to play with that in mind. It's more risky to play like that, but it is a route that you can try to kind of incorporate here. But remember, your trading should only be a few trades a day, a few trades a week. I don't want none of you going crazy trading, unnecessarily. You only do that whenever you want extra experience or you got an extra cash account with some extra capital. That is no problem with me if you want to do that. But only when it's extra, of course. Again, let's zoom in here. SPY's consolidating right underneath that wedge again. We'll see if this drops you down right back below again. Getting exciting now. Come on now. Remember, once this gets above this orange zone that's right above us, you have to pay very close attention to that yellow one. If you fall down below the purple zone here, you want to be very careful as well. You might go ahead and make a new low. The trends have been expanding since the market opened. You have a first move, right? You went down a certain amount, then you ran up a certain amount, then you went down even more. Now you're going up even more, so it's matching it somewhat, right? We're not really choosing a direction yet. We are, kind of choosing the upward direction, which is what I want you to acknowledge. I do agree with you, yes. We are choosing the upside right now. But when you pay attention to the equal reaction, as well as where we opened up at, as well as how far we dropped below, currently the day is pointing down right now. And again, that's just due to the market movement since the opening price. That's it. So because of this move right here, this first 10-15 minutes, it now tells us what's going on here and what's the temperature. And as long as we can understand that, we know exactly how to play, the next move, which is we're now going to use $40 because our first play worked out 3 times in a row, but we're just going to say it worked out 1 time. We want to choose an option that's 1 strike closer than that strike. And we want to maybe potentially start playing with 1 days instead of the 0 days. 1 days are always going to be a little bit more favorable than the 0 days. You're going to make less, of course. However, you're not really going to make less. The one thing I want you to consider is that if the option that's going up $80 went up $80, there was another option on the options board 2 weeks out that went up $80 as well. The only problem is that it probably costed around $1,000. So it probably went from like 1,000 to 1,080. It still went up 80 though. You ever realize that? It's still the most wild thing in the world. When I recognized that, I was like, what is the purpose of playing a 1 day or 3 day option? Why don't we all just play 20 days and 30 days? Because it's just consistent. You just buy it at the top, buy a put up there. If it still runs up the next day, you buy like a 10-day call, so it's cheaper, so it moves faster, but it's still going to move up practically the same. The only thing is that if you're using an option that's closer to being in the money, it therefore costs less. Therefore, you could buy more. Get it? That's it. That's the only thing. So as long as you can play with that concept in mind, you'll very slowly start to recognize that, no, yeah, you always need insurance plays. Insurance. Everything is dependent on your insurance here because it gives you the confidence. So the next time I'm buying my insurance play is going to be at 585 for the call side. For the put side is going to be around the highs. So around either 605 or 611. That's when I'm going to buy my next insurance play for the downside. And that's all, family. We'll see if this gets shut down right below the 200 once more. We're also going to shut down pretty much everything here. Let's do this. What the hell? Remember, if you get above this wedge right here, which is this white line at 601, there's a very good chance you could run straight up to 602. That's all I'm waiting for right now. Right above 601. third reversal point. Let's see where we're at. Yeah, so it just hit off the third reversal point. Ran right back to the opening price, which is number 1. Stop right before the high. You're now falling straight down to reversal point number 1, which is for the downside. If you hold around this level, which is 616, you're going to see the market get bought right back up, potentially heading straight up to number 4, which is 603.71, or 602.13, which will be the closest projection. So as you can see, family, what do you think? So far, so good, right? So it happened February 5th. Every time something happens, I'm going to put the date it happened with a check mark. Or if it didn't happen. But then again, if it didn't happen, that's going to be a little bit more messy. So we'll just tell you if it did happen and what days it did happen. Everything else is going to be basically it not happening. Remember, it happened once already, so we just got bought right back up to the high. If you sell right back off and start falling even lower, we're going to have to give this another check mark. So yeah, we'll see if we start ramping up above this, because then that starts to basically open up the next opportunity for the call side for you to run up first to 603. And then once you get above 603, 5% port into more calls for this to run up to 605, 606. If it can't get above this level right here, I could put these 4 levels for you. All right, family, take a look. Boom, boom, boom. Yeah, this is nice. Looks like Nvidia is getting bought up. If Nvidia holds above 122.70, you're going to see this start to run up to 128 and at 135. I'm looking for both of these levels right here. My major level, of course, is going to be right there by that blue circle. That's where I'm planning on selling out of my plays. All right, all right, all right. I think that's everything that we had to talk about so far. SMCI is getting ramped up here, straight from 25 to 33. I mean, it's kind of funny because we wrote this like a month ago, and that was the idea decided to follow. So that's excellent. That is excellent. At that point, if you got into any calls for SMCI, you're already up. Put your stop loss just in case. You're looking for more downside though, so we could potentially look at downside right now for SMCI. We just gotta be careful. Remember that news is gonna come out on February 25th, so we got about another 20 days for SMCI for them to release the filing of basically whatever they messed up with. All right, everything else checks out. Everything else is beautiful. We just need to strangle SPY a little bit here, and we'll be all good. So again, we're approaching the highs once more. Uh-oh. What's going to happen? So let's see if we add any more routes from this current area here. So again, if this is going to be aggressive to the downside, that's exactly what it's going to do. It's already shut down past this orange one, so you're going to shut down even lower. Stop somewhere in between this orange one and this orange one. Most likely get bought up to the orange. And it gets sold right back off right before hitting the purple. Just due to the fact that you've been at the purple for so long, there's no necessary reason to hit it anymore. You just need to hit a level that's strong, point blank, which is going to be this next supply and demand zone. After that, you want to see if this gets slammed down to the yellow. 595, 594. And then vice versa. You want to see if this is one going to get sold off at the top of this orange. Because it's clearly up here. It's clearly above the 200. It's clearly not at the purple one no more. So because of that, that tells me right now as I'm speaking, this potentially might switch up to a higher high and get bought up here. And if that's going to be the case, you might get sold off from this next level up here, which is going to be 601.70, or this level at the top, 602.48. There we go. Let's see. 602.48. We can go as high as 603 today in terms of just looking at the past couple days. If we speed up, you might even hit 605, 608. And if you speed up to the downside, you already know the name, or the level. Sorry, I said the name. You know the level, which is 585. And that's pretty much it. Anything else in between, you're not messing with. You're not wasting your capital. You're not putting profit in. You're just sitting on the sidelines waiting. Let's look at the reversal chart real quick. Reversal chart. If you break below the 200, watch out for more downside, everybody. It might just crash down a little bit further. You say AMD is happy? Let me see. What's AMD doing here? You're getting bought up at 108. There we go. Video looks pretty good here. Check. Actually, wait a second. Alrighty, everybody. I kick things into the private. Watch this high here. Pay very close attention to 601. Make sure you go light today. Don't be too aggressive. Remember, purple, yellow, orange in between. Next major level for puts is the yellow. Next major level for the calls is the purple. 3 to 5 days out. You hold and you wait for it to hit the next color. You only buy one contract at a time. Simple as that, family. Just do that every single day and you'll see how fun it gets. After about 1 to 2 weeks, you'll get the hang of it. And like we always say, it becomes a brainless trade. Because you're not supposed to think. Thinking is for when things go wrong and you need your mental. You don't want to burn through it unnecessarily throughout the day, because that is a very real thing, let me tell y'all. Especially if you're doing a bunch of trades, you're definitely going to burn your mental like that. By the way, that's the fastest way to burn your head. You get into more trades. And what I mean by that is, like, you just feel burnt out, you feel exhausted, you feel tired, you feel like you don't even want to think about this no more. But yeah. All right. Remember, you stay above this reset point, you're going to potentially start running to this next reset point, which is all the way at 609, 608. If you stay above 680. That's where this reset point exactly is. Oh, no, actually, it's exactly at 601.15. 601.15. So another level right at 601, which is kind of funny. Most charts, they line up with 600 or 601. That's the reason why we're very carefully playing this and not aggressively just, you know. Options up 20% again. Now 30. Now 40. Just mess the trip like a speed. 40, 58%. Sorry, 48, not 58. Don't get ahead of yourself there, buddy. Tell me what's the word. You must not heard. Put your stop losses, please, family. Stop losses. Let's do this, family. Keep it going, Spy. Keep it going. Our stops are now set. You better not wick down one more wick. It's going to sell us out. I got my stop at $35. Currently, the option's at 36. Now it's at 35, 36. If it hits 34, it's going to sell me out. By the way, that's how that works. So it doesn't actually sell you out at the price that you put it at. It sells you out once you hit the price below that price. So let's just say if it said, for the bid and ask, it said 34, 35, it would have sold me out right there. Because it did not say 34 once, not even for a split second. Of course, it didn't sell me out. And remember, the market fills orders in order. So depending on when you put your order in, it's going to get filled as so. So that's also something else to pay attention to, right? It just filled right here. I want to see if this is going to run up a little bit higher. And then I want to see if we could play some puts right around that yellow box right above us. We also have the 611 calls that we averaged down on this morning. We didn't average down at the purple area, which we could have. They were the same price, so that was the reason why we didn't. And we're just holding the same option. These expire tomorrow, so that's the only problem right now. The good thing is they're only $5, and we only have 2 of them. So it's not too much risk right now, which is perfect. Only thing we want to see is us fine-tune our skills, get as much percentages as possible. Right there, that was like 420%, and then like 2 of them went to 40% right there. So again, that's not bad. And it was the same option. Paying attention to, again, just one play. As we're speaking right now, I'm looking at the puts. I like choosing puts 3 strikes away, 4 strikes away. 598 puts. You are getting sold off here. So again, you're just watching this very carefully. If you fall right back down to the purple, we're going to hop back into a call. So again, if you just go straight down to the purple right now, perfectly fine. We're going to hop into a call down there. Right now, you're around the midpoint. Which, I'll be honest with everybody here, that's exactly what we're going to do. We're going to fix up pretty much when I turn off the live now and we kick things into private. We're just going to prepare everybody for the next week. Of course, we do it after hours, and we did it last night, and we did it this morning as well when we woke up around 6 a.m., 7 a.m. And we continue to do so till about the opening price. However, I think if we insist and we continue to do so, everybody's going to be pretty much perfect for the rest of this week. And then over the weekend, we're going to have a class on the Discord. I'm not too sure what day exactly. I'll probably let everybody know the day of on Saturday. So in the morning, like an hour before, we normally have our classes. Which, by the way, for everybody that just joined, we have our classes at around 10 a.m., usually to 12. But I'm not going to lie to you, for the past 2 months, we've been doing these Saturday and Sunday classes for 8, 9, 10 hours. It's just scattered. So it's not like one straight, time we're here. We're here for like an hour or 2. We leave, come back, do the same thing. And we're getting a lot of charting work done. Let me tell you that. We already finished about half of the names that we need to pay attention to for the next 5 to 10 years. We already finished those charts. So all we need to do right now is just fine-tune what we have, make it simpler, take out as much unnecessary components as possible, and just fine-tune it. And then we'll add some other components once we learn another style or another concept, or we do something different and it has just different results and tends to be, something a little bit better. If it's something better than before, we're always going to make sure we add it to the table so that we can consistently improve here. So